Bitcoin ETFs see 14 consecutive days of net inflows as crypto market cap crosses $2 trillion. So 14 consecutive days of money constantly coming into cryptocurrencies. Has this happened before? I'm sure it's happened before. But you know how the news cycles are. They take a fact and they make it into a news and they expand on it. So let's just see what they wrote about it. Bitcoin ETFs continue to experience hundreds of millions in demand a day after setting a historical high for daily net inflows. According to Social Value, spot Bitcoin ETFs marked the 14th consecutive day of net inflows with roughly $339 million on February 14th, only $300 million less than the day before. Only, right? BlackRock claimed the largest inflow of the lot, garnering $224 million, while Fidelity recorded $118 million in net inflows. BlackRock and Fidelity are by far the largest new Bitcoin ETF issuers, with $4.8 billion and $3.5 billion in cumulative inflows since trading was authorized by the U.S. SEC. The two giants command nearly $10 billion in AUM, accounting for over 200,000 Bitcoin acquired by 9 issuers of Bitcoin ETFs. So for those of you who don't know what AUM means, it means assets under management. Experts like crypto lawyer John E. Deaton tied Bitcoin's price rally to demand for spot BTC ETFs and massive Bitcoin acquisitions by issuers. John E. Deaton writes, yesterday Pop was on CV Payne's Making Money show and discussed how the day before inflows were at 12x the daily supply. The next day, yesterday, inflows reached 14x. Common sense and basic supply and demand economics make it pretty easy to understand what's happening. So let's further expand on that. Let's see what this guy has to say. And it says, okay, at some point, almost everyone is going to want to participate in price discovery. Inflows like the above, coupled with having suggest 50 to 60K is still quite early. Ooh, wow, okay. While BlackRock and Fidelity outclass competitors, Grayscale GBTC ETF saw another net outflow day at $131 million. GBTC has shed over $5 billion since it began trading as an ETF on January 11th. The fund remains the largest, holding over $23 billion in assets under management. Following rulings from the U.S. bankruptcy court, Grayscale may offload another $1.6 billion from its GBTC ETF. Judge Sean Lane approved bankrupt crypto lender Genesis to sell 35 million Grayscale shares. Bitcoin ETF interest boosts crypto market cap. This seems like another news. Yeah, so this seems like a completely new news, right? Let's read it anyway. Bitcoin ETF interest boosts crypto market cap. Institutional demand for Bitcoin ETFs has seemingly galvanized broad interest in cryptocurrencies. Bitcoin's price uptick has coincided with an uptrend in the total cryptocurrency market capitalization. The crypto market was worth over $2 trillion as of February 15 per CoinGecko, with BTC trading accounting for over half of this figure since it reclaimed a $1 trillion valuation. Trading data confirmed BTC as a dominant crypto asset, boasting a 50% market share. Cool, so that just means that cryptocurrencies continue to rise, and that we should be paying attention as always. And let's see what the news for this is from BNN, breaking.com. Okay, so CNN, but with a B. Crypto market hits $2 trillion. Bitcoin and Ethereum lead the bullish charge. The digital economy is soaring as the crypto market reaches $2 trillion, led by Bitcoin and Ethereum. NFTs and mainstream acceptance drive growth, redefining currency in the digital age. Okay. Yes, I got excited reading that because this is a good news for all. Because yes, I'm slowly starting to get my horses back in line. I do want to start acquiring cryptocurrency again. In a world where the digital economy continues to grow, continues to break traditional barriers, the crypto market has emerged from its latest cocoon, presenting a spectacle of bullish trends and groundbreaking narratives. At the heart of this financial renaissance is Bitcoin, whose market capitalization recently soared past the $1 trillion mark, with its price eclipsing $52.2 thousand. Alongside Ethereum and a host of major coins have not only updated their highs, but have etched a new chapter in the annals of digital currency. As we stand on the brink of February 15, 2024, the total market cap of touching the $2 trillion milestone is not just a number, but a testament to the enduring appeal and growing acceptance of cryptocurrencies. The surge of titans, Bitcoin and Ethereum, lead the charge. Amidst the fervor, Bitcoin and Ethereum have stood out as beacons of hope and pillars for strength for the crypto enthusiasts and investors alike. Bitcoin's journey past the 52.2 thousand mark is a narrative of resilience and widespread adoption, not just by individual investors, but also traditional financial institutions. The daily inflows into Bitcoin ETFs are nearing record levels, a clear indication of the growing institutional interest. Ethereum, on the other hand, has surged to 2,800, riding on the back of its utility and the booming non-fungible token market. Where the Bitcoin blockchain leads in trading volume, this dual ascendancy is a vivid illustration of the crypto market's robust health and its potential for even greater heights. NFTs and the fintech revolution. The narrative of this bullish market is incomplete with the mention of NFTs. These digital assets have transcended their initial curiosity status to become a formidable force in the art of entertainment industries. The TechCrunch crypto newsletter, evolving from its predecessor Chain Reaction, brings to light the burgeoning NFT series and the pivotal role played by platforms like Animical Brands. An interview with Animical's co-founder Yatsue sheds light on the symbiotic relationship between NFTs and the broader crypto market, highlighting the transformative power of blockchain technology in creating new value systems and avenues for creators and collectors alike. Market dynamics and regulatory landscapes. As the crypto market thrives, it navigates through a complex web of regulatory scrutiny and financial innovation. The UK's Financial Conduct Authority has issued warnings to cryptocurrency firms, signaling a future where regulatory frameworks could shape market trajectories. Meanwhile, Forbes' listing of top fintech companies, including several crypto firms, is a nod to the industry's growing legitimacy and its pivotal role in the financial sector's evolution. These developments, coupled with Anthony Scaramucci's bullish outlook on BTC and the record gains by altcoins such as Binance Coin, Ripple, Cardano, and more, paint a picture of a market at the cusp of mainstream acceptance and regulatory adaptation. As we wrap up this exploration into the crypto market's current state, it is clear that the journey of digital currencies is far from over. The milestones of a $2 trillion market cap and Bitcoin's price movements are not just numbers on a screen, but markers of a shifting economic paradigm. Ethereum's surge, the rise of NFTs, and the market's overall bullish trend underscore a broader narrative of innovation, resilience, and the relentless pursuit of value creation in the digital age. As the crypto market continues to evolve, it promises not only wealth and opportunity, but also a redefinition of what currency means in the 21st century. So the news in summary is saying that cryptocurrencies are going to continue to rise. The market cap has hit $2 trillion, which is a big deal. Have you ever seen $2 trillion? So this is a big deal, and it's exciting. So this is why we read the news, because sometimes just reading the news is enough. And for me, just reading that is enough for me because I know that this is the right direction. I've never read the news like this before. Usually when I read the news, it's always about some war or something going on, like some terror thing. But crypto, is a hyper focus. It's like reading the news, but only going to the finance section. But this is like reading the news, only going to the finance section, and only going to the crypto category. We are hyper laser focused, and this is why those of us who are paying attention are going to come out ahead. Next up, we have attacks on Bitcoin and Ethereum, now economically unfeasible. Research. According to a research report, the theoretical costs associated with successfully attacking Bitcoin and Ethereum far outweigh the benefits. Like, you would need to be from Saudi Arabia or Dubai, and you got to be like a king or a prince over there in order to be able to attack Bitcoin and Ethereum. You got to be like the Prince of Brunei. You got to have some. You got to have some serious wealth that you control to be able to attack Bitcoin and Ethereum at this point. The current security models of Bitcoin and Ethereum make 51% and 34% attacks, respectively, economically unfeasible, according to a new research paper published on February 15. A 51% attack is an attempt by an entity to gain control of more than half of a blockchain's mining hash rate, theoretically allowing it to alter the distributed public ledger maliciously. Similarly, a 34% attack attempts to manipulate the consensus of the ledger in proof of stake or BFT networks to approve or disapprove specific transactions by acquiring network state. According to the researchers, it would have cost an estimated $34.39 billion to 34% attack the Ethereum network on December 31st, 2023, when Ether was priced at $2,279 per coin, and it would take until June 14, 2024 for the attacker to successfully gain the required control over the network. In the case of Bitcoin, different scenarios prove similarly unfeasible. For example, it would cost an attacker more than $20 billion to produce the number of ASIC mining units needed to gain majority control over the foremost blockchain's hash rate, an impossibility due to limited microprocessor availability. Alternatively, an attacker would need to collude with hardware manufacturers in an unlikely scenario that would also run into supply chain issues. Electricity costs to run the mass amount of machines would also prove prohibitive. The findings lead the researchers to conclude that the security of Bitcoin and Ethereum has evolved to a point where the costs and risks associated with attacks far outweigh any potential benefits. That's exactly what we wanted to hear. That's exactly it. Don't attack Bitcoin and Ethereum. If Bitcoin and Ethereum are not able to be attacked, then what does that mean? It literally means that this is new money. This is going to be the greatest wealth transfer of our time. Those who know. Those who don't, it's probably too late for them. Well, not too late because I still don't have any crypto, so I don't want to say too late because I don't want it to be too late for me. But in a few years' time, it probably will be. All we got to do is keep on top of the news and see what happens next.